Good day, everyone. Welcome to my tutorial class. So today we are going to discuss on subsidiary book. Subsidiary books. In our previous class, we discussed extensively on source document. Now we mentioned them such as invoice, debit note, credit note, receipt, check, timesheet, voucher, and so on and so forth. So we discussed them one by one. I explained everything in that tutorial. So today we now say, okay, let's look at what is subsidiary book. Subsidiary book is a book of original entry that capture the transaction initially before they are being posted to the ledger and for further processing. But these are the first book in which we record the transactions as they occurred. You know, normal business transaction revolves around sales, purchase, and cash. So I'm going to mention these subsidiary books, such as number one, we say we have cash book. Number two, we have sales day book. We have number three, we have purchases day book. Then four, we have sales return day book. Number five, purchases return day book. Number six, we have journal proper. So these are the books of original entry that we have. We say we have cash book, sales day book, purchases day book, sales return day book, purchase return day book, and journal. We say number one, let me explain them one by one before I go deep into them. We say cash book, these are the books that record all the cash receipt, and also cash payment. These are the books that take care of them. Once the transaction is done by cash, not on credit, they will enter into cash book. Then number two, we have sales day book. These are the book that we use to record all credit sales, the sales that are made on credit. Then purchase day book, opposite of sales day book. These are the books that we use to record all the credit purchase, the amount of goods business purchase with their supplier on credit. If it is by cash that they purchase goods, is going straight to the cash book. Then we have sales return day book. Sales return day book are the books that record the amount of goods, that customers return to the seller, to the supplier. So when we have such case, you record them under sales return day book. The same thing, purchase return day book are the goods item returned to the suppliers. Okay, business bought goods and there are some defective goods or wrong supply of goods. It's not what you order that is being sent to you, return. So it says, like I said, sales return day book are the quantity of goods return from the customer to the suppliers. So by this one, the business will return it. Maybe if let's say we are XYZ business, XYZ Limited. When the XYZ Limited bought goods and there are some there is wrong supply, it's not quantity, or it's not the quality that he ordered for that is being supplied to him, he's going to return it to the supplier. So when he return it to his supplier, he's going to record it under purchase return day book. And also if his customer return to him, says return day book. Then we have journal proper. Any transactions that cannot fit into this cash book, says day book, purchase day book, says return, those they will open journal for them called journal proper. This journal, example of this, maybe if there is an error, correction of errors, and so other entries that cannot fit into this the 5 mentioned above. So today I'm going to start with cash book. Like I said, cash book is a book that we use to record cash transactions that are done and the money is being paid immediately, not whether giving you cash or transfer to the bank, but once money is paid instantly, so it will be recorded in the cash book. Now this cash book is of three type. We say we have single, we have double column, double column, and we have 3 column. So this single column, this is the kind of transaction that is been done in the past, whereby people don't operate banks. They don't have, even if they have bank account, they don't use it for business purpose. They don't transact with it, so they prefer cash. So then we have double column cash book. That one, it involves using of what cash and bank together. You'll be participating, be transacting, collect money in cash and also through bank transfer. Then we have 3 column cash book. These 3 column cash book, they transact with cash, bank, and if there is any cash discount given to the customer, is going to reflect in we are going to open 3 column cash book if we have such kind of transaction, whereby the business give discount and also receive discount. So then now let's start with this single column cash book. Single column cash book. In single column cash book, like I said, nothing, there is no bank. The format for single column cash book is, maybe we have, okay, let's say we have debit, we have credit side, let's say we have cash book, let's just say cash book. Then the first column we have date, particular, folio, and cash. The same thing, you do divide it into 2 sides. Then we have date, particulars, folio, and cash. So this is the format for single column cash book. There is no bank, no column for bank. Now, so let's just put this question. Example, XYZ Limited started business on first, let me use number, on first of May 2023. During the month, the following transactions took place. So now let's say, okay, let's see just a brief example how it the single column cash book look like. May 1st, paid the same date. May 1st, paid. Okay, I have not mentioned the amount. Started business. This is with the capital. He started business in the month of this with the following. Then capital. Let's say, okay, capital of, let's say 1,000. Sorry, I didn't put it earlier. Let's say this is the amount I use. Capital 1,000 naira. Then paid rent 200. May 10, bought goods by cash 300. May 15, sold goods by cash, let's say 280. May 30, let's say paid salaries by cash 100 naira. So these are the transactions that, let's say, are required to prepare single column cash book. Now let's say again, single column cash book. What is the name of XYZ Limited? So you now, is it preferable you use ruler? So I'm using freehand scale because of font that I am ordering. Then date particular folio cash. So you write date particular folio cash. Then May 1st, the date where the first transaction occurred on May 1st. So the capital will be debited. This is the rules. Okay, when you open capital account, this is capital. We have a concept called business entity concept. That is concept that differentiate owner and the business itself. When we are starting business, capital, okay, you are taking money out, right? So let's say 200, money is going out. What is going on is cash that you are using to start it. So in cash account, so you record it under debit side with capital as particular. Then amount from this question, I say 1,000. Let's 1,000 naira. Then next transaction, May 10, bought goods by cash 300. Bought goods by cash. May 1st, paid rent, the same date, May 1st, particular rent that we're paying by cash. How much? 200. After that transaction, you go to get it. Third one is May 10, bought goods by cash. When you are buying goods, your money is going out, like maybe paying for rent, cash is going out, so you record it under credit side. This debit side, what is coming in. So now May 10 is on the credit side. We are what? We are buying goods. So you now say bought goods. You put what? Purchases. So the amount, how much is the purchases? Is 300. Like I say, cash is going out. For you to buy goods, you are going to take the money out to buy the goods. So, and it will be recorded under credit side. Then if it is sales, for example, you sell, money is coming. When you sell, you collect the money. So you are going to record it under where? Debit side. So May 15, sold goods by cash 280. So you put May 15 under debit side. You say sales. So how much? 280. The next, which is May 30, is what? Paid salaries by cash. When you are paying money out for salary, so it will be recorded under credit side. May 30, particular salaries. How much? 100. So now we are done with the transaction. It's left for you to balance the account. So if you want to balance it, you are going to look at the both sides, debit and credit side. What I used to advise my students to do, just write the total down. This debit and this credit. Under cash, how much? 1,000 plus 280. We have 1,280. On the credit side, how much do we have? 200 naira plus 300 naira plus 100. That is how much? That is 600 naira. We are going to write it here as well. So among these two, which one is bigger? Debit side is bigger. Is it 1,280? So you leave one space. Put 1,280. The reason why I say you should leave one, in case the balance carry down, the differences will be on the debit side. So that's why it is preferable I say, okay, you leave one line. Yeah. Then and so the same thing, this bigger one you record it in two sides. So now we would say, okay, we say debit is 1,280 and credit is 600, meaning that debit is greater than credit. So what is the difference? You put the difference here at the end of May 31st. Balance carry down. So what is the difference? 1,280 minus 600. What is the distance? It should be what? 1,000 minus 600, 400 plus. It should be answer is balance carry down is 680. Good. Is that not so? It's 680. So for you to confirm whether it is correct, you are going to sum them together by saying what? 200 plus 300 plus 100 plus 680, 1,280. So answer is correct. So then this balance carry down next month, for you to continue with your transaction for next month, it will now say, okay, after May, which month follow? June, right? June 1st. You say you have what? This balance carry down, it will balance BD, balance brought down. So what is the amount? 680. So this in next month you will not have capital again. You won't have capital. Is this balance BD that you have? Understand? So today we are going to stop here. In my next tutorial we are going to continue with the double column cash book, and I'm going to show you the question that we are going to do in that double column cash book. This is the question. I say enter the following transaction in a double column cash book. March 1st, cash in and 80,000 naira. March 1st, bank balance 120. You know, like I said, this one it will not have capital here. Rather, it's what? Balance BD. So like I said, in our next class we are going to solve this problem. So please don't forget to like and subscribe to my channel on YouTube. So support your boy.